Sometimes you wanna go where everybody knows your name, and they're always glad you came. You wanna be where you can see our troubles are all the same.
Hey, good afternoon, everyone.
You wanna be where everybody knows
here.
your name.
Glad to see everybody here. Thanks very much for being here. This should be pretty good. Not necessarily the presentation, but what comes afterwards, because we'll be looking at some live charts. I think the presentation will be good. I didn't mean to sound bragging about it at all. But afterwards, because of the way the market acted today, I think we're going to have some pretty nice chart setups, and we'll definitely go look at those after this PowerPoint presentation. Just to sort of, the PowerPoint is just to get you through some of the basics, and then we'll take a look at those charts. Please keep in mind that the pinball at the end, you know, I'm going to make you an offer, 25% discount off the pinball ebook. So just be thinking about that as we go. You might find it useful. I hope you do. I think you will. A quick little disclaimer here. There is a really high degree of risk involved in trading stocks, any kind of equity for that matter. And it is very important you do your due diligence and your homework to make sure you want to enter a trade, and make sure you make a plan so you know what to do in case the trade goes south on you. You always want to have a backup or a back door, something to get out of that with. You don't want to be living with it. You don't want to be married to it if it's not working for you. So please, please, please be very careful as you trade. Never trade with more money than you can afford to lose. I want to reach out and say thank you very much to the Warden Brothers and TC2000 for allowing me to use their charts. All charts you see today will be provided by TC2000 and Warden Brothers. So a big shout out to them. Really quick, when we all started trading, to be honest, I've never heard of anybody that started trading and say 5 years has gone past, or for that matter, even a year, and they right out of the gate were making money, good money, and a year later they're still making money, or 5 years later they're still making money, or 20 years later they're still making money. I've never, ever, ever, ever heard of that from anybody, because it's usually not what happens. You start trading, and to be truthful, I think when you first start, you probably do pretty darn good. And then what happens is you get creative, and then you actually start losing money. And then if you're able to make sense of what's going on, you probably have come back, and now you're doing pretty good. And that is exactly what happened to me. And I suspect that's true with most everyone else as well. And the pinball setup was the chart pattern or the strategy or the tool and toolbox, whatever you want to call it. This is what made the difference going from struggling to actually trading for a living. This is what really kicked it off. That made it worthwhile. And I want to share this with you, the pinball strategy. I call it my little ATM machine. One of the reasons I call it the ATM machine is generally you go to an ATM, you can't draw out big lump sums of money. You can only draw out small amounts of money compared to. And that's what this is. We're not going after the home runs. Now, if you think a 15% gainer is a home run, then okay, batter up. Let's go. But we're not looking for the 50, 60, 70, 100%ers here. We're not. In fact, you're not going to get them at all if you follow the pinball setup rules. It's just not going to happen. But if you're looking for that 10, 15, 20% move, in markets like this right now, you could see some 20, 30% moves if everything swings right. All we need to do is swing for about a week the right direction, and we're going to pull out some great trades on this chart setup here. So, but if you're looking for those base hits, this is a good chart pattern. If you like to buy charts, go long on charts that are coming off the bottom, or what we call bottom picking, if you like to do this, that sort of trading, then you might like this chart setup. Although this is not going to get you anything off the very, very bottom. It will get you close, but not that bottoming candle. Let's see, we did that. There are a couple of chart setup rules. One, we want to see an established downtrend. We want it to be very definable. And how are we going to define that? I'm just going to use one color here in lieu of time. I'm not going to get real creative. There we go. We want to see the 200, well, I'll get creative. We want to see the 200-day moving average moving down. We want to see the 50-day simple moving average moving down. We want to see, let's see, is there such thing as orange? Nope, we'll use yellow. We want to see the 34 exponential moving down. And we want to see the T-line moving down like this. And we want to see price closing up to the T-line. So that right there is a couple of rules we want. We want that downtrend. Price must be in a definable downtrend on the daily chart. We're doing everything from the daily chart. I get asked all the time, can you use this same chart pattern on a weekly or intraday? Absolutely. Absolutely you can. But what we're going to do is strictly look at it on a daily chart today. Yes, Steve is asking, what exactly is the T-line? It is the 8 exponential moving average. The 8 exponential moving average. Thank you for the question, Steve. The bottoming formation, we want price to reach a low, and then we want it to stop moving down. We want to see evidence of this behavior with bullish candlesticks. Usually that's what we see, or some sort of chart pattern that gives us some bottoming, bottoming action. So we want to see maybe a rounded bottom. We want to see a low, high, higher low, higher high, something like that. We want to see maybe candlestick signals, which you don't have to have candlestick signals. In other words, you don't have to have a bullish engulf. You don't have to have a bull kicker. You don't have to have a piercing candle. You do have to have some sort of bottoming formation. That you have to have. And day one, we're going to count day one as the first close over the T-line, the 8 exponential moving average. And this is when the trade becomes, you can put it on your watch list on day one. You can also buy it on day one, but that's not what I'm going to necessarily teach tonight. I'm going to actually teach to buy it the next day. The next day is the way the original T-line, or the pinball setup, that's the way it was set up, and that's the way I'm going to teach it. Profit potential, we're looking at the profit potential is measured by the distance of day one or the T-line. It can be either one, to the 34 exponential moving average. But we want it to be at least 10%. Now here's the thing. If the T-line is at least 10% away from the 34 exponential moving average, and then the candle closes up, but the top of the candle is not 10%, what you want to do then is you want to wait for that next day. This is why I'm going to teach it the next day, how on to buy it the very next day. Because what we want is 10% to that T line, to the 34 exponential moving average. What we're doing here is we're taking a oversold chart, not by way of stochastics, not by way of RSI or MACD or whatever you might use. It's simply overselling two moving averages together. So we want the T line to be stretched out at least 10% away from the 34. Because all we're looking for is a snapback. That's it. All we're looking for is a snapback, little ATM snapback. Let me get myself figured out here. There we go. Here's the downtrend. I'm going to cover my moving averages very quickly. This is what you'll see on my charts every day. The 50-day simple moving average, the 34 exponential moving average, which is very important to this chart pattern, the 20-day simple moving average, and the T-line, which is very important to this chart pattern. And this dotted line here is the 200 simple. The trick is not in the moving averages. The trick is what you do with two moving averages and by spreading it out. Now, I've also discovered that the 34 exponential moving average is about the most perfect moving average I found for this chart pattern. It took me a long time to figure this out and a lot of painstaking hours to do it. But this is the one I came up with, which was what I feel is the absolute best. And again, we're looking for at least 10% move from the T-line up to that 34. Some bottoming formations we're looking for might be things like double bottoms, rounded bottoms, flat bottoms, bullish reversal candlestick signals or patterns. This is showing a double bottom. This is what you might look for a double bottom, and then you're looking for that candle to close up through the T-line. Again, we want the 34 exponential moving average to be at least 10% away. That is extremely important. Extremely important. This is what you might see in a rounded bottom. This is also a bullish W pattern. You can see that bullish W pattern. So anytime you can see a pattern coming off the bottom and then crossing up through the T-line on this day like that, then you've really got a good game going here. This is a great game when you can put together a pattern like this, a nice, let me get rid of these, a low, high, higher, low, bullish W pattern. Some people might even call that a double bottom. We've got the breakout of the bullish W pattern, and we're closing over the T-line. That is an exceptionally nice chart pattern setting up for that rounded bottom breakout. Here's what we might see in a flat bottom. And even in the flat bottom, you're going to have some sort of chart pattern, a low, high, higher, low. As small as it may be, or as just not much rise in it. I mean, this is almost just a flat bottom. It's almost non-existent of any chart pattern in there. But you'll still be able to see that chart pattern there. That's the kind of thing you want to look for. And by the way, don't be bashful. Please ask questions. I welcome questions. I don't mind if they're during the presentation. I don't mind at all, because I can almost guarantee if you have a question, there's about 9 other people that also have the same question, but maybe they're a little afraid to get out there and type it. So please don't be afraid to jump out there and ask. A lower high, higher low sequence. This is one of my favorite chart patterns right here. And you can see that right here. See the low to the high, to the higher low. We break out, and look how we're over the T-line. See this first candle over the T-line? We're going to buy this on this very first candle afterwards. Oh, I guess that's candle number 2. This would be candle number 1. A high-low, higher-high pattern. We're coming from a downtrend. And then we put in a low, a high, a higher low, another higher low, another higher low. We go from this high to a higher high, and so on. And you know, this is not anything new. Everybody here has probably seen this demonstrated to them 1,000 different ways, 10,000 times. But it always amazes me on after that 10,000th time, how many people the light bulb goes off and they go, oh, that's what you mean. So that's why we keep going over some of this basic stuff. We just keep hammering it because it's so important. Let's get to another slide here. This is going quick. We'll be able to spend some time looking at charts. Bullish candlestick patterns that you might be looking for are engulfs, hammers, haromis, kickers, piercing candles, tweezer bottoms. Tweezer bottoms are good in this type of in this strategy. Morningstar signals, belt holds. These are things we might look for in this chart pattern to get us started. So let's see here. We are, we're moving down, and then all of a sudden it starts flattening out, and then it starts moving up, and this is where we might start seeing some of those chart patterns. And as it moves up over the T-line, you might see one of those chart patterns in here as well. Very important. A doji is not a reversal signal, Coach. Yeah, a doji is not a reversal signal. These are reversal signals. So let's throw a quick summary up. Really simple. What we're looking for is a definite downtrend. We want to see price. These are the moving averages I use. I want to see them all pointing down. And I want to see price making that move up through the T-line. Bottom formations, we want to look for chart patterns, double bottoms, lower highs, higher lows. In other words, what we want to do is create a checklist. Okay, you know, part of your trading plan, create a checklist, something like that right there. And then, you know, do you see a bullish engulf? Do you see a double bottom or a higher low? Do you see those sort of things? Well, that adds to the makeup of that bottom. You know, maybe there's a bull kicker in there, or maybe there's a piercing candle. You know, try to get as many of these boxes checked as you possibly can. You know, a candlestick signal. Let's see, a candlestick signal, a double bottom. You know, can you put those two together? And when you can find those, again, it just adds to that, the power of that bottom. Let's see, Mike is asking, your 50 is EMA or SMA? No, it is SMA. SMA. Simple. Let's see, Nini is asking, do the trend lines need to be in certain order, for example, the 20 below the 34 and so on? Yes. Actually, that's a great question. Thanks, Nini. Yes, we want them to be in a downtrend. So what we're going to look for here is, we'll do it this way. We want the T-line to be moving below the, we'll do the 20. We want it moving below the 20, but sometimes sometimes you will see that price actually takes out the 20 as well. The 34, we want that moving down, but we want these moving averages below the 34. And the 50-day simple moving average, we want it moving down as well. And then we want the 200-day moving average always up here. If you know, you can find charts that look a lot like the pinball setup that are above the 200-day simple moving averages, or simple 200 simple, and it's probably a very nice chart setup. I'm not going to beat that up, but it is not a pinball setup. So you might use the same logic. Excuse me. You might use the same logic on the pinball setup, but above the 200, but it is not a pinball setup. So the 200 always has to be above. Sorry about that. Okay. On day one, we want to see price moving above the T-line, and we want it to close above the T-line. Very important. You can buy it on that first close, but what I'm going to show you and pretty much teach tonight is just buy it on the next day, not the first day. Profit potential should be at least 10%. Anything less, and you're moving away. You're moving away from the pinball setup. This is the rule right here. The rule is 10%. Now, if you want to bend that rule, you go right ahead. But none of the charts I ever look at for a pinball setup are less than 10%. And my scans, I actually don't use 10%. I think the minimum I use is 13%. I want to give myself a little extra. And our target is always the 34 EMA. Where are we here? Okay. Now let's look at a few more rules. Second here. Okay, a couple more rules. Day 2. This is the trade entry day. We want day 1 to close above the T-line, and we want to buy day 2 preferably below the high of day 1, so an inside day. The exit, the profit target, is going to be the 34 exponential moving average. Now, I'm going to show you a couple of intraday charts where this might change, but we'll talk about that a little bit later on. But at the 34 EMA, always take half the position. The name pinball, it's not some clever name that I sat up one night late over a beer and made up. The pinball comes from something that I felt like when I first started trading, because I was taught to trade off the bottom. I was taught to be a bottom picker, which I have to tell you is one of the worst things you can do. I don't recommend it to anyone. That is why the pinball setup was this strategy was set up. It's named the pinball setup because if we have I'm going to draw them just big. This represents the T-line, and then the yellow will represent the 34, which my 34 is orange, but I don't have an orange color here. So what would happen is, I could find the charts. That wasn't the problem. And I could be in it, and the chart would move up, but do you think I would sell it? No, because I got greedy. And before you know it, it would come back, and do you think I would sell it on the way down? No, because no matter what we do, we work on this thing called hope. As much as we'd like to take it out of the picture, we all have a hope indicator built in us. So I hope, hey, it went up there before, I hope, I hope, I hope. Come on. It was up there before. I hope, I hope. Well, if I was smart at this point, then what I would do would sell it with a loss. But do you think I was that smart? No. I ended up selling it down here. And then once I sold it, guess what? Stupid thing went right back up. Oh man, went right back up. That's how it got the name the pinball. If you can think of a pinball machine and you've got your hands on the flippers out there, you're flipping those flippers. Well, that ball is just going back and forth in this area. This is also the area that a oversold stock that ends up bullish, breaking out, good numbers, making lots of money. This is also the construction area. And this is why I kept losing money, is because I never realized at the time this was the construction area for a larger bullish move. But we have to have that construction area. So what I did one day, and I'm not kidding you about this. This is for real. One day I got the bright idea, I'm not going to let this thing beat me. I sold it. And I'll be darned if I didn't make a good percentage. I don't remember what the percentage was. I made more dollars than I've made in a long time. Talking about a light bulb going off. Man, I'll tell you, it's like, whoa, what just happened? So that's what I started doing. I would play the same chart, but that 34 EMA became my target. I would sell. And then as I got more confident, I wouldn't sell the whole position. I would sell half the position. And then if the chart just consolidated lightly, I was good with that. And then if it started to break out, I would buy more to that position after pocketing this money, and now we've got a bullish little J hook, a continuation pattern. So this became a very money-making chart. Now I'm getting a little bit out of bounds here. This is not a pinball setup up here. I need to stay inbound, so let's stay here. So the point is, we can all find chart patterns down below. The problem is we sometimes miss how to trade them in the construction area. So remember, this is just construction. This is the process of putting at least 3 legs on a stool. A stool cannot stand on one leg, and it cannot stand on 2 legs. This is the process of putting at least 3 legs on a stool. So you want to take advantage of when that paddle pops that ball up, take your money. And to be honest, I could talk to 155 swing traders in here. And I'll bet you 155 swing traders would say, I would love to have 10% money with very minimum risk. We want the stop is based on the close. So if the T-line, let's put the T-line back up here. We're going to make it big. So if the T-line is back up here, and then it closes, first of all, let's give it a bullish candle, day 1, and then a red candle, day 2. If it closes below the T-line, you've got to be out of it. Remember what this stock started with. All moving averages in a downtrend. Hence, this stock is in a downtrend. Make no mistake of that. Don't try to beat it. If it can't break out of that trend, then it's going to continue down. So it's very important that if we get a close below the T-line, I don't care what this candle looks like. I don't care if it's a bearish engulf. I don't care if it's a piercing candle, whatever it is. If it closes below the T-line, you've got to get out of it. Now, if you did everything right with step number 1, or step number 5, I guess, or yeah, on the buy, if you did everything right and you bought on an inside day, above, at, or very near the T-line, meaning you could buy a little below, then your risk has become a speck. Your risk has become a speck. 1-2%, that's a speck. That's pocket change. That's money everybody can afford to lose. That's one of the keys to this strategy. You want to keep your risk very small. A safety stop. If you have a chart, I'm going to draw the chart in a line, not in candlesticks. We're moving down, and then we start to bottom, and then we move up. We're not even above the T-line yet here. And we move down, and then let's bottom out again, and now we move up, and okay, we break out of the T-line here. Now this is the T-line. So if day one closes over the T-line, if day two closes below the T-line, you need to close it out. But you want to put a safety stop in here somewhere. So you might put a safety stop here. Or maybe you put a safety stop at this peak. I would probably go a little bit below the peak of, in this case, the W pattern. I just drew a W pattern, okay? It doesn't have to be this. But you want to keep a safety stop in there, just in case you're not paying attention. Here's what happened to me a lot. Price would go down, and I'd make every excuse in the world to stay in it. Oh, it can't go down anymore. Oh, hey, it's right on support now. It can't go down anymore. And it closes up above that support. Okay, I'm now the smartest guy in the world until the next day. And what does it do? It opens up. I'm happy. It opened up inside. Heck, it might have even got a little bit green on us. And then it starts moving down. Darn it. Well, that's okay. It can't move down anymore because I'm going to make every excuse in the world to keep it. Well, you'll keep doing that. I don't know about you, and I do know. Everybody has done this. At some time in their trading career, everybody has done this. You'll keep holding it. At least put a safety stop in here that slaps you upside the head and said, hey, buddy, you put me in there for a reason, and now I'm going to do my job. And in all honesty, I'm going to save you tons of money. Because if this was a $100 loss right here, that's going to be the best $100 loss you have, because in the end, you're going to take a $500 loss down here. So you might as well do it up here where your safety stop is. But again, if it closes below the T-line, you need to be stopped out. I know a lot of people that just put their stop right underneath the T-line and be done with it. A lot of people. Let's see here. A lot of opens lately have been big drops. Yeah, Natalie, don't judge trading on what the market has been doing lately. Yeah, I wouldn't judge that. I don't want to bring up the chart right now because it'll just interrupt the way everything is set up. But we can look at the last few weeks. We can look at the last year. Well, if we do that and if we start boogering up, how we've had these big moves down, I'm going to go to a weekly chart and show you how the last 8 years has been beautiful. I'm going to show you how all the money in the world could have been made on a weekly chart. So I don't know that I would bring what's happening just today to the table without bringing any good with it, okay? All righty. Where are we? I always miss what chart I'm on. Okay, trade entry. You see here how we've got the moving averages moving down, the T-line, the 34, the 20, and the 34, and then we put in a low, a high. We just sort of create a bottom. That's all we're doing here is creating a bottom. But you see how we've created a double bottom, and then we start popping up, and we're above the T-line. Now, in this case, we're also working with the 20-day simple here. Now, it just happens to be that way. So you see that little red box I've drawn right in there? It's already there. The first day over the T-line, what we want to do is we want to be a buyer. I don't mind buying below the T-line, but at the end of the day, it's got to close above the T-line. So you want to be a buyer somewhere below the close or the high. I prefer the close of day one. You want to buy in here. Now, you can visually see how tight our stop is. I mean, that is pretty darn tight. Very, very minimal risk, what we've got going on here. You know, I want to stop for a second, and what we're doing is we're setting up a plan. That's all we're doing is we're setting up a plan. I want to stop just for a minute. I want to go off topic just for a second. Tomorrow, I don't know exactly what time tomorrow. I'll find that out. And Saturday, Doug runs Right Way Options here at Hit Run Candlesticks, and he's going to be doing a presentation on a trade planner. We've got a free trade planner available now, and we've got another one that's going to be launched, I'll say, a month and a half, okay? Could be a little sooner, could be a little longer. We don't have an exact date just yet, but we're getting close. I highly recommend you show up tomorrow for those webinars, and I will make sure you have exact time and a link and everything. We'll get that put together and sent out so you'll know that. And what it'll do is it ties in exactly with this sort of thing. You set your stop. You put your stop in. You set at what price you're going to buy it at. You set your target, and it's just so sweet. It's very helpful in creating that plan, and a plan is so important. Okay, so we want to buy on an inside day here, and we're looking for at least 10% up to the 34 EMA. Are you able to say anything about the? Are you able to say anything about the new planner coming out? The difference between the paid version? It will be a paid version. It will be very affordable. I will tell you that. And the difference. What's the difference? Let's see. No heartbeat versus a very strong heartbeat. How's that? It's like night and day. You know how we go through trading, and every now and then we have those aha moments. We have those moments when the light bulb goes off so bright you've got to put your sunglasses on. When you have those moments where you go one day where you're always losing money, and then all of a sudden you figure something out and you're now making money, this makes that look like rubbish. Trust me, you need to take a peek at it. And I'm going to just stop it right there. I'll just leave it right there. Okay. Exit the trade. Exit the trade. Here we go. So we've entered the trade, and as price moves up, as price starts moving up through that 34 EMA, we want to start taking those profits. Well, actually, I apologize. This is my 60-minute chart. This is different. Let me show you something. This is where we want to take profits right here at the 34. Now, what I want you to do is when you enter or before you enter this trade, I want you to go to a 60-minute chart. See that little dotted line right up there? That's the 200 period moving average on the simple. That's the 200 period moving average on the 60-minute chart, and it is a simple moving average. What I want you to do is mark the price or take note of it. And then I want you to go back to the daily chart, and I want you to put a line where that 200 period is. And if that line comes below the 34 on the daily, I want you to use this as the target, not the 34. So If this line here, the 200 on the 60-minute, is up here, I want you to use the 34. If it is at 29.78, like this one is, and it's below the 34, I want you to use that as your target. If you don't have 10%, that's not necessarily important. What we want is 10% between here and the 34. But if it's only 2% from here to here, it might not be worth the trade. The stop. If it closes below the T-line, be stopped out. Don't argue with that. Trust me on that. Where would you put your safety stop? Right there. This stop is in case you get up, grab a sandwich, and you come down, you get stopped out. This stop is in case you go to the grocery store, you think everything is working great, you don't have a stop on, at least put that safety stop down there. The safety stop is also for the person that does not have the power to say, hey, I'm going to lose $100 and I'm okay with that. Because that person there, they need to finish that statement. Here, I'll finish that statement for you. Hi, my name Hi, my name is Rick. I'm not strong enough to close this out at $100, so I'm going to wait till it gets down to $500 loss, and then nerves will force me out of it. That's what this stop is for. So trust me, take the stop. You can always get back in. And there's our safety stop. That's where you want to put your safety stop. Summary. Day one, price closes over the T-line. Day two, you want to enter, you want to enter above the T-line but below that day one. I don't mind entering below the T-line, but it must close over the T-line that day. That's a must. So there's a little thing that I change up a little bit there. For starting out, go by the rules. It must be above the T-line and below. I like to buy below the first day's close. Now, you don't have to. Can you buy above the first day's close? Absolutely. Do you want to buy 9% above that? No. You want to buy maybe 1%? Sure. You might do that. You might want to do that. Remember, the T-line is your stop. So you have to ask yourself, can you afford that loss if it starts heading south? Exit the trade at least 50%, half your position at the 34 EMA, or that 60-minute 200 period moving average. You want to be closed out if it closes below the T-line. Get out of it. This is kind of an interesting one here, because what happens, and the same breath, somebody says, hey, Rick, what do you think about this chart? It's moving below the T-line. I'm going to say, well, you should probably wait to the close, near the close of the day, say 30 minutes before the market closes. Here's where you might not wait for that. Say it's moving, let's first give ourselves a green candle, day one, and then now we have a day two. And let's go ahead and give it a bullish engulf. And let's give it a T-line here. T-line right there. So day one, we're over the T-line. Day two, we've got ourselves a bearish engulf. I think I said bullish, bearish engulf. We're closing below the T-line. Now, there are some cases in this, I probably over-exaggerated this just a little bit. But the truth is, I will do whatever I can to wait toward the end of the day to make my decision whether to close it. Here's where I will just close it out. If the market is doing this, why would you want to stay with that chart if the market is doing this? So if I have something that looks like this at noon, and the market has just been moving down and nothing, it just still looks like it's moving down, then I'm going to close this out at noon. I'm not going to wait to the end of the day. The market is putting all sorts of pressure on us. What in the world makes me think this thing is going to stop and turn around and get bullish? So that's the circumstance where I will not wait to the end of the day. Safety stop. Always use a safety stop. Here's a little hint. On all trades, use a safety stop. All trades. Okay, here's a sales pitch. Anyone that wants to buy the Pinball strategy ebook, it's a $24.37 savings. Use discount code MPD25. You just have to go to the website, click on products, look for this strategy. You'll see it looks just like that. Discount code MPD25. Caps, all one word, and it will automatically change the price from $97 to $97.47 to $24.34. I want to say, from Hit and Run Candlesticks and Right Way Options, thank you very, very, very much for being here. Don't leave just yet, because I want to go look at some charts now that we might be able to trade tomorrow, the next day, or the next day. Who knows? So what I'm going to do is just give me a minute to slide this out of the way. And let's go take a look at these. Now, I've got a scan down here. You don't see it because it's out of the camera, but it's the same scan that I use for, it's on the website. You can go grab it. It's right there, the same scan. So I've already keyed up a couple of charts, and we'll look at those first. I did this before the market closed today. Let's take a look at WPRT. Let's do this first. The T line, the 20-day simple moving average, the 34 EMA, the 50-day simple moving average, and the 200 simple moving average right here. Notice how they're in a nice little downtrend. We come down, we put a little multi-bar bottom in, and one heck of a candle today. Now, there's the 34 right there. Let's just take from the close today up. That there alone is 13%. Now, I'm not necessarily interested in buying it there. I'm more interested in buying it down here, because the T-line is going to be my stop. I don't want to buy it up here because I don't want a 13% stop. So I will wait patiently for this stock to move down. Even if it moves up, that's okay. Keep it on your watch list. Let it move back. It might give you that buy again in this area or close to it. And then you can get your 13, 14, 15, 20, 25% out of it. So right now for this particular trade, tomorrow I would like to see this stock move down, and it popped up pretty high, so I'll give it something in this area right here. Now I mentioned the 60-minute chart. So what I'm going to do is I'm going to go over here to the 60-minute chart and the 200 SMA right there. See where that's at $1.87? Let's go over. See, that was the 60-minute, wasn't it? Yeah. $1.87. That's where the 200 is. So right there, that has to be my my area that I'm going to use for my first target. So there's no way in the world I could buy this chart on positive trading tomorrow up here. No way in the world. That's just not enough. I'm not going to go to work for 6%, and you shouldn't either. If it comes back intraday and you could buy it, say, at $1.61, now we've got 15.5% profit target. Take 50% off the table. Here's another one. OVAS. 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 This popped up very big. I want to look at a buy above the T line, but because it's up so much, let it come back a little bit. If you can get into here, there's a 19% profit target on this. 19%. Let's take a quick peek at that 60-minute chart. $9 and a nickel. So let's come over here. $9 and a nickel. That's actually a little bit below the 34, but I don't know that that's enough to make any difference. I'm not going to worry about it. So if this can give me a buy in this area, what do we have? A 21% possible trade. That's nice. Here's another one. Look at that bottom. That is sweet. We have a low. These two candles here held inside that low, and then we came down and made a lower low, and we came up with a big bullish engulf. Now, this did not close right above the T line, and I wonder. I'm going to change something here. Yeah, it still didn't. Still didn't. So, but, this is one of these things where when you're using indicators, remember just the name of the indicator should tell you something. Like a moving average. It's just an average. That's important. That's very, very important. It's just an average. So can we actually call this a pinball setup? Nope. We can't. But do you think I'm going to put it on my watch list and trade it the same as a pinball setup? I sure am. I absolutely am going to do that. This is a great bottom, bullish engulf, good volume. From the T line up to the 34 is 31%. Heck, all I've got to do is catch 50% of this trade. And I am happy. And I will bet you that everybody here would be happy too, just to catch 50% of that trade. But I am going to treat my buy as an absolute pinball, so it's got to stay above that T line there. VSTM, here's another one. Look at that bottom. Man, is that a bottom we could sink our teeth into? I think so. From the T line up to the 34, we have 21%. Where do we want to be a buyer? That's pretty darn tight. Being that tight, I would even give that a little bit. Give it a little bit. I mean, what if you bought it at $1.49? Stop below the T line, that's 4%. Maybe that's too much. You've got to make that decision. One more I have here. CMRX. I love this chart. That's 133% to the 34 EMA. Forget the 34. Let's go find that 60-minute chart. Whoops, that's not a 60-minute chart. Different chart. The 60-minute chart, the 200 is at $20.40. So that's way up here. So we're not even going to worry about the 60-minute 200. All we're going to worry about is the daily chart. Now what I want to do is I like to use this little thing over here. And what this is just a, what do they call that? A quadrant lines. This shows me where 50% of this high to this low is. Well, and even that's at the 34. That's too high. So on this one, I might put some fib lines up there. Let's do that. You've got to do something because that's ridiculous. That's insane to think you're going to collect 130%. I mean, that's just. I don't want to lead anyone to believe that that would be an easy trade. That is not. That's a hard trade. But collecting part of those profits could be. So let's come over here, the T line, and let's run up. We're going to run up to where these stops or where these candles are. So we should turn this around a little bit. I think probably the same numbers, but I just like to read it that way better. There we go. So right here at the 20-day simple moving average, that's your 23.6% retracement. If you bought this thing, say at $9.14, would you be happy with a 60% trade? I don't even need to talk about that one anymore. Absolutely, you would be. That's my answer. Let's see, Joe. Let's see. Is there a way to put the percentage on my charts? I use teal. Tony, I have no idea. My personal, I don't know. Let's see. ONTY, are you saying that that's a pinball? Let's go look. Yes, it is. I believe it is. Let's check our 10%. That's nice. That's 30%. Here's one reason I don't know if you noticed it on all the charts I looked at. And by the way, they were not cherry-picked for this reason, just like this is not cherry-picked. That 34, it coincides with resistance very well. There you are right there. I see that so much, it's crazy. It's crazy how much that coincides with this area like that right there. So I look at this as that's a nice trade. Thanks, Joe. That's a nice chart setup. 30% to the 34. Let's come back here and look at this. We've got a nice bullish Hiromi, and look what happened. This chart was originally down here. The bears had a chance to really take this thing down, but the bulls came in and bought it. This right in here, that is solid bullish trading, because the bulls are holding it not just up, but they're holding it above that low. Heck, they're holding it above the open. That's solid bullish trading. And then you have a bullish engulf like this today. Sweet chart. Thank you, Joe. Very nice. Nice trade. Anyone have any else? And please, do you have any questions on the pinball setup? Do you have any questions at all? Oh, sorry. Do you consider the news in this? So what if we look up and find it's dropped because of bad earnings report? Nathan, you always want to be aware of what's going on out there, but if it did this because of a bad earnings report, why can't it move back up? What if the earnings was right here, and you can see from here up, you've got a 17% trade. We're trading the chart. We're not trading news influence. So you can chase news. I'm not against that. I don't. I chase the chart. I'm looking at something I can tangibly get around. I don't know about you. I've been doing this for over 20 years now. I can make no more sense of good earnings or bad earnings anymore. I can't. And to be honest, I'm finding more and more educators, you know what they're saying? Don't trade earnings. You know why? Because they can't make sense of it. No one can. So it doesn't matter whether it's in poor earnings or not. All we're doing is playing the snapback trade. That's all. All we're doing is playing the snapback. We're not buying this, in some hopes that it's going to be back up here at $5. Not at all. All I care about is that trade from here to here. That's all I have to manage. That's it, right there. So, to give you a real clean answer, nope. I don't care anything about the earnings or anything like that. Okay, where are we here? CRK. CRK, is that right? Yeah. Nope, it hasn't been. has not been discussed, not to my knowledge anyway. I don't remember it. That's another nice one. That's a great looking chart pattern right there. Nice rising method. So here we have what I'm going to call a double bottom, bullish engulf, a rising method above the T line. Let's put our buy box in there. Man, I want to buy this tomorrow in there. And are we there? Check here. Man, I got to put a line up here. Look at that. Check out where that 34 is. This is not I didn't pay Joe to throw this out there. This is what happens a lot. Look at that 34. Look at where that resistance is. Our goal is to buy it here. Our stop is going to be about 4% away. And our profit target is 30% away. I like that sort of trade. Now, let's take a look at this stock. What if tomorrow it opens up? Let's open it inside the box. But you don't buy it. And then it moves up like this. But what happens is it puts in a little wick up here like that. And then it starts closing back down. Would I take that trade? I would. Now, what I would want to do is I would want to look at an intraday chart, and I want to see this start popping back up. So I want to end up seeing, I'll go ahead and draw a little wick on it here to give us that instead of that horribly shaved bottom look. So it puts in the bottom and it starts back up. You bet I would buy it in here. This was my plan. So I want to trade my plan. This candlestick here has very little to do with my plan. Very little. So my plan is I like this chart. I've already told you what I like about this. We've already looked at the 34, the resistance. We've already looked at the percentage that could be made. We've already looked at the stop. All that is done. All that is written down. If you're using our trade planner, then you've already written that stuff down. If you're not using the trade planner, you wrote it down on a piece of paper. You've got your plan already in place. All you need to do is buy it. So I'm not using this candle to buy it. I'm using the fact it's inside this box to buy it. Well, the only place I'm using this candle is that I don't want to buy it if it's just a shaved bottom continuing to move because there's no signs of buyers. But you throw me a tail on it like this, and you go look at intraday, you're going to see some buyers. You're going to see an intraday chart pattern. So I want to be a buyer here. I know where my stop is. It's part of my plan. Thanks. I need to write that one down. Which does that have enough volume? Yeah. CRK. All right. For some reason, I don't see it on my scan. The reason I asked, so I'm going to figure out why. Okay. So we traded ZFGN on a daily chart today. Not news until. That's a true story, Mike. That may be too much information to talk about on the microphone here because this is being recorded. But yeah, what was that ZFGN? But that's a true story. That's a true story. I was in this one here. I lived through the pullback, moved up, closed it out for a 65.5% profit. This was my target. This target was based on the 4-hour chart after it surpassed the 2-hour chart, and it nailed it. I mean, right on the money, and that was a good trade. But yeah, nice trade there. All right, let me see here. Oh, there's that CRK. Let's see if I can find another one here. Take a look at TRCX. TRCX. Doji, bullish engulf. We've got a multi-bar bottom. Look at that multi-bar bottom. A low, a close, a doji, an open right there. That's nice. Doji, bullish engulf. We're over the T-line. Look at that. We have 16%. Notice over here where the resistance is. I'm telling you, that 34 EMA and resistance in the past is amazing. Absolutely amazing. Where are we? Let's see. Tom is asking, how long do you expect to be in these trades? You know, Tom, it's hard to put a time limit on it. It can happen. You know, once you buy it, it can run up in one day. It could last 3 or 4 days. I will say that if it doesn't get itself going relatively soon, 3 or 4 days, the odds are it's going to fall back down below the T-line. So we're definitely looking at a, you know, overnight makes it a swing trade to 3 or 4 days maybe. Yeah. Take a look at MAC. Look at MAC. A buyer inside 656. Look at the 34. Over 13%. Look at that resistance on the left. Look, I am not. This is a little bit different scan than the one I'm using. I was showing you before. I'm not cherry picking these. I mean, this is them right there. Look at that resistance at the 34. Look at the left. That's amazing. That's why that's a target area. If you could muster up a buy, who cares what the candle looks like? That's important. Who cares what tomorrow's candle looks like when you buy it? I care when it closes, but not when you buy it. So if you could buy it for $28.38, there's a 16% trade. ONTY. Look at that bottom. My goodness sakes. Look at that 34. I guess we've already looked at that one. Must have. I don't know why I had that there. Court. Look at that. 34. Look at that. Like I said, I'm not making this stuff up, guys. I'm not. I mean, this is cool stuff. This is the kind of things that dreams are made of. So here's what you do. You go to the website, you download the trade planner. Trader Vision is what it's called. You download that, and then tomorrow you be here and let Doug show you how to work it and how to enter the numbers. And now you plan your trade. You plan your trade. You're going to know what your risk is. You're going to know where your entry is. You're going to know where your target 1, maybe target 2, maybe target 3. You're going to know where they are. Not only that, you're going to know when you enter in your numbers into. Thank you, Ed. When you enter in your numbers to the Trader Vision, you're going to know what your profit is for target 1. So I'm going to make numbers up because I don't know how much money you're trading with, or I don't know how much, you're going to put into a position. But maybe target 1 is $200. The trade planner is going to tell you that. Maybe target number 2, you're going to make $300. Maybe you're going to look at moving out on three positions. One position, a third each position you're going to walk out of. So the first position you're going to walk out of the first third with $200. Maybe the second third with $300. Who knows? Maybe you walk out of the last third with $500. The Trader Vision Trade Planner will do that for you. It'll tell you what you're doing. And the neat thing about it, it will tell you, it will help you learn how to make a trade plan. I hear from people all the time. How do I make a trade plan? You know, we talk about a few things, and when they first start, they're doing a great job. But before you know it, they start putting all this emotion into it, and now they've written out a trade plan that's 8.5 pages long. And now they're so overwhelmed, they never finish it. For the first thing, your trade plan should never be 8 pages long. We've developed something that for half a dozen keystrokes, you're done. This is the free version. Wait till you see the other version. Wait till you see that one. It'll blow you away. It's amazing. So anyway, I'm going to stop right there. A reminder, if you're interested in getting the ebook, use that MPD25. If not, no worries, no problem. You know, if you're here during the day, I answer all the questions I can possibly answer on the pinball setup and all chart patterns. If you want to give us a try, please do give us a try. Give Right Way Options a try. Members e-learning, by the way. Here, I'm gonna let me say thank you very much for a minute to everybody for being here. I'm gonna shut the camera off. This doesn't need to be on the recording. I'm gonna do that so